Welcome back to the program. It's Capital Market live here on Channels Television. Analysts at FSDH Group are calling for investments in Nigeria's education, automotive, as well as healthcare sectors as the investment banker reiterates its call for the restructuring of Nigeria's energy sector. The head of research, Ayodele Akinwumi, discussed these recommendations at a media session with financial markets journalists.
Now, the policy options that we are recommending and suggesting are the removal of all administrative delays in obtaining licenses and approvals. This includes titles to landed properties for building and agricultural purposes. Government should support the provision of long-term mortgage loans at concessionary rate terms for her workers to activate the economic activities in the real estate sector in Nigeria. Investment in data generation in the solid mineral sector of the Nigerian economy. Government can sell the data to potential investors interested in the sector. This will reduce the risk inherent in this untapped sector of the Nigerian economy. We note that nearly all states in Nigeria have at least one solid mineral resources or the other deposits, and therefore government can unlock this for the community development to generate revenue for government involved and also increase its tax income. Urgent restructuring, deliberate and consistent investment in the nation's educational system to enable it to provide relevant trainings that are needed in the modern digital age. We observed critical skill gap in the nation's educational system, particularly in the public schools at all levels. The sector can create more jobs for teachers and administrators, and can also attract foreign investments and save foreign exchange earnings for the country. There is the need for human capacity building in business management and leadership. This must not be left to business schools, which are only affordable to a few. Establishment of well-funded technical training centers in all local government areas in the country in conjunction with the private sector operators. Investment in infrastructure through partnership with the private sector that will reduce the risk involved in agriculture and agro-allied industries. The reduction in import duties on imported manufactured cars. This is to avoid high costs associated with brand new vehicles in the country, so that Nigerians are not pushed to buy fairly used vehicles with their associated negative environmental impacts. While we understand the need for the government to use the import duties to encourage investment in the local auto industry, a graduated import duty policy for a few years, say 5 years, will be appropriate. And within which time, the local capacity, the operators in the local auto industry will be able to build local capacities so that there will not be a gap. Investment in affordable healthcare, public healthcare system to increase productivities of workers, reduce brain drain, and reduce foreign medical tourism with its associated drain on the foreign exchange earnings of the country. Adjustment of the electricity tariff to reflect current costs in the economy and to enable the sector attract investment and guarantee efficient metering system for users. Removal of the subsidy now in quote, on the premium motor spirit, PMS, to free up more resources to critical sectors of the Nigerian economy to drive competition among the operators and attract investment in the sector. The Central Bank of Nigeria, the CBN, needs to maintain its current tight monetary policy stance to ensure a continued price stability in the financial market. The CBN may also consider the removal of the current multiple exchange rate system. Now, the other macroeconomic development in the economy in February and outlook for the month of March as follows. FSH Research expects the February 2019 inflation rate to drop marginally to 11.31 from 11.37 recorded in the month of January. And this will be the second consecutive month of a drop if that happens. FSH believes the inflation rate in double digits, as we predict in 2019 and through 2022, may not justify a reduction in the monetary policy rates of the Federal Reserve Bank. The external reserves dropped consistently in the month of February. However, we observe that the external reserve has been rising since the beginning of March, largely driven by portfolio investment. The current position of external reserves continues to provide short-term stability for the value of the naira. Capital importation via the foreign portfolio investors, FPI, in the investors and exporters foreign exchange window, that I&E window, increased in the month of February for the second consecutive month. This provided support for the foreign exchange rates during the month. The medium-term stability in the foreign exchange market will depend on the country's foreign exchange receipt from both crude oil and non-crude oil products.
Well, in the week ahead, there's a whole lot for investors to watch out for by way of regulatory decisions. So we expect that the Securities and Exchange Commission will host its 2019 edition of its budget seminar in Lagos. And of course, the event, which is themed Budgets, Elections and Capital Markets, Risks and Opportunities in 2019, will hold on March the 19th. That's Tuesday next week. It is expected to bring together experts from the professional, policy and academic backgrounds in order to deliberate extensively on the implications of the budget for the 2019 market sessions that will be expected, and of course with its impact in the Nigerian capital markets. A day or two after that particular program, the first Capital Market Committee meeting for 2019 will also be holding on Thursday. That will be Thursday, March the 21st. And the capital markets stakeholders, including regulators, operators, are all expected at that meeting with a media briefing scheduled to hold a day after this particular meeting. That will be the 22nd of March. So here on Channels Television, we should also be able to bring you some updates from that meeting as the Capital Market Committee 10-year master plan will get some boost again from the operators, because the regulators will be giving a whole lot of updates about their findings regarding the last assignments that they were given from the last session of that meeting in 2018. On that note, that's it on the program for this weekend. Thanks for watching. I'm Temple Ashaju. I'll see you again next time. Bye for now.